Welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. We have a great show for you today. Also, subscribe to my newsletter at KalilahReynolds.com/newsletter. Now, come on, let's get this money. Ventures is reporting $1 billion in net profit for Q1, a first in the company's history. How did they do it in a pandemic and with new competition? We'll speak to Executive Chairman Gary Peart. And the analysts weigh in on the latest market developments. What's going on with iCreate? The stock price has been soaring in the past few weeks. Radio Jamaica will be acquiring 1834 Investments. What does this mean for shareholders? And overseas, Elon Musk and Twitter are finally making it official. And Netflix stock has slumped by 35% after a sharp drop in subscribers. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
After weeks of drama, Twitter's board of directors has accepted Elon Musk's offer to buy the company. Twitter announced on Monday that it had entered into an agreement to be acquired by an entity wholly owned by Elon Musk. The transaction will see Musk paying $54.20 US for every Twitter share, which will cost the billionaire approximately $44 billion US. Musk has hinted at turning the social media platform into a privately held company. The deal, which has been unanimously approved by Twitter's board, is expected to close in 2022. However, it's still subject to approval from Twitter stockholders. Radio Jamaica is acquiring 1834 Investments Limited, the company that holds the non-media assets of the Gleaner Company. In 2016, Radio Jamaica acquired the Gleaner's media assets, but the non-media assets remained in the company, which then changed its name to 1834 Investments. According to a notice posted on the Jamaica Stock Exchange website, the deal will see Radio Jamaica acquiring all of the shares of 1834 Investments. In exchange for shares, 1834 stakeholders can receive shares in RJL, cash consideration, or a combination of both. 1834 Investments is a local holding company for domestic and international investment assets. The deal is still subject to approval from 1834 shareholders and the Supreme Court. Portmore's economy is set to get another boost as Fontana has announced that it will be opening its 7th store there. According to the company's CEO, Anna Chang, construction has already begun next door to the recently opened Price Smart. Chang told the Jamaica Observer that the development is expected to cost around $1 million US and should be completed by early 2023. Fontana is a pharmacy and retail chain with stores in Kingston, Montego Bay, Ocho Rios, Mandeville, and Savannah Lamar. The new store will be housed in a 25,000 square foot commercial space, smaller than the Waterloo Road location, which was opened in 2019. According to Chang, Portmore has a lot of growth opportunities with an underserved population. The new store is expected to provide some 50 new jobs when it opens next year. The government of Guyana says it expects to earn $106 million US from the sale of its first 1 million barrels of oil. The barrels were produced from Guyana's second oil ship that is operating offshore, the Liza Unity. The forecast price for the first lift of the unit gold crude from Guyana is $106 US per barrel. According to the government, the barrels are sold to US-based ExxonMobil after a competitive bidding process. The government noted, however, that the lift was a one-off arrangement for Exxon, as it will seek to secure the best prices for Guyana's oil lifts each time. The Liza Unity, a floating production, storage and offloading vessel, is expected to reach a target production of 220,000 barrels of oil per day. Streaming giant Netflix says it is considering running ads during its programs to offset some of its recent money problems. Netflix shares fell more than 25% last week after the company reported that it had lost 200,000 subscribers since the start of the year. The company, whose claim to fame has been the lack of ads, had previously told shareholders it expected to add 2.5 million net subscribers during the first quarter. However, in its latest announcement, the company forecasted a global paid subscriber loss of 2 million by the end of the second quarter. This is the first time the streamer has reported a subscriber loss in more than a decade. Service in Russia, as well as increasing competition from new streaming platforms, played a major role in the first quarter performance. The streamer also pointed to password sharing as a possible explanation for the recent stall in paid subscriptions. It estimated that in addition to its 222 million paying households, access is being shared with more than 100 million additional households through account sharing. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
Spurtree stock is up 300% in just 3 months since its IPO, and Fesca stock is up 1,000% since IPO a year ago. $10,000 invested in Fesco a year ago would be worth $100,000 today. And while these results aren't guaranteed, you need to learn how to start investing so that the next opportunity doesn't miss you. Take my Investing for Beginners masterclass and learn the basics about stock market investing, how to decide what to invest in, and how to get started at KalilahReynolds.com/masterclass. But wait, there's more. Get my broker guide, stocks tracker, and free access to my newsletter when you subscribe today. Go to KalilahReynolds.com/masterclass. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. And
download today. Register using your existing NCB online banking login credentials. To open an account or get more info, contact our Wealth Hub today.
Welcome back. Welcome to everybody joining us from all around the world. Let me big you up. So let me know where you are joining us from this evening, which part of Jamaica, which part of the world. As you know, in the early warm, we do the shout outs. So checking in from London says Kish Lindsay. Checking in from Trelawney, formerly of London, says Arch. Big up yourself, Arch. Adrian says checking in from Westmoreland. Ken Miles, live from St. Thomas. It normal, alive. I'm happy that you have good enough internet to be watching us live from St. Thomas, because I know St. Thomas is notorious for having internet access issues. Colette Brown says, Kingston, ready to get that money. I'm happy to hear that, Colette. And Kimika Kong, St. Anne, formerly Kingston, let's get this money. Alton Deakid is joining us from Port Antonio. He says, locked in and ready to get this money. By the way, what's going on with Jamdex and that 2,500? Good question. I am patiently awaiting, just as you, and as soon as I know, you will know. I'll pass on that information. I know that there were some delays because it was expected early April and then mid-April, and now I'm not quite sure of the exact timeline, but like I said, as soon as I know, you will know. It is coming soon. And Havendale says Dwight Walker joining us, and then Jack Badu is all the way in North Bay, Ontario, Canada. Big up yourself, everybody joining us from all over the world. Make sure you hit that like button. We want to see the like button because you know what it does with the algorithm. It helps YouTube tell other people that they should be watching this show, that they should be interested in this show. Well, tonight is $1 billion program. And that's $1 billion in just a quarter, you know, not even for a whole year. It is the big, the mighty Supreme Ventures Limited. That's what we're talking about. We were scheduled to be joined by Executive Chairman Gary Peart, but we had some scheduling challenges at the last minute. And so my G is joining us, Dennis Chung, who is the CEO of Supreme Ventures Services, one of the subsidiaries of the group. And Dennis, you know, my good friend. Dennis, how you doing?
Hi, good to see you.
Thanks for filling in at the last minute. Let me just ask you to tilt your laptop forward a little bit so that you don't look, yeah. Looking much better now. All right, so let's talk about Supreme Ventures Group and the performance, because what a quarter you have had and what a year indeed. I see you brought back Scratches. Tell me about Scratches. How's that been doing?
It has done phenomenally well. I think it has exceeded our expectations, and we're so happy about how Jamaicans have accepted it. We always wanted to bring a product, and we always try to bring products to the market that Jamaicans enjoy from an entertainment perspective, and importantly for us, that we give back to Jamaicans because, I mean, in this quarter alone, our prizes were 20.6 billion that we gave back, which is an increase of 12.6% over last year. So, it has done very well for us, Kalilah.
Yeah, the hand scratching. Yeah, I like the creative use of Jamaican music and culture in scratches, and how it really has taken off. It's caused only by excitement out the road. I think we have the ad lined up.
Play scratchers. The new instant win games from Supreme Ventures. With scratchers, you can win enough. You can win often. And you can win right away. So buy your scratchers tickets now. Only at Supreme Ventures.
Scratchers really is taking off there on the market. So tell me also, Dennis, about how some of the other lottery games are doing in terms of performance.
Well, they're doing very well. Sports betting, for example, that is something that we looked at as a strategic move during the COVID lockdowns, because we knew that most persons many persons, a big part of the market that plays in sports betting actually is online. And, we see that the results speak for itself. Our gaming income was 490 million, or 16.6% over last quarter. Our lotteries reported an increase of 1.4 billion, or 31% in gaming income over last quarter. So it has been doing well. The products have been doing well. We've also been seeing improvements in our horse racing product. And all of this is due to deliberate strategic decisions that were taken during the lockdown. We saw opportunities coming out of it, and we jumped on it. We have a great team in place, and I think that's what kept us going through the 2-year lockdown.
Last year, there was a big deal made out of the introduction. Was it last year or 2020? I don't even know how time goes fast, but there's the introduction of competition for Supreme Ventures. For the first time ever, you had to face competition in the lottery market with the introduction of IZIZZI and I forget the name of the other one. I'm not a lottery person myself, but so for you to record these mega profits, $1 billion in a quarter, the first ever in your history, in the context of now having new competition and in a pandemic, tell me what made the difference? How were you able to do that?
All right. First, credit is due to the team and the board of directors, and the management and the staff in the group. When we heard that competition was coming, we embraced it. We said, listen, this is a chance for us to pull up our socks, realize the opportunities, and look at where we can benefit from it. We didn't look at it as entirely a negative, but certainly something that we think that we could get the better of. And at the start of it, I actually said something that William Mahfood said to me years ago. He said that the best thing that ever happened to him in the water market was competition, because when competition came to the market actually expanded. And I think that because of the attention that was given to it, I think that we actually saw that happen in the lottery market. And, we took deliberate strategic actions to actually hold on to our market share and, just provide value to our consumers. And I think that's the key to it. We constantly are looking through, our marketing team. You see the attractiveness of the Scratchers ad to provide value, to give back. It's not just in our prizes also, but if you look at our report, the amount of work that we do through the foundation also, we're a Jamaican company that is about giving back to Jamaicans, providing entertainment and giving back. And I think that that philosophy, that core philosophy, along with the fact that, you know, we have a great team behind us, you know, and that's, I think, is our greatest asset, as our chairman always said, is what enabled us to actually do so well during the pandemic, you know, and come out ahead even with competition.
But that's really interesting that you mentioned that the competition was really good for the business, and what William Mahfood said with that and how that affected his industry with water, because I think a lot of people have that misconception that if there's competition, then there's only room for one, or there's only room for a certain number, a limited number, not realizing that competition indeed can bring increased awareness to the industry and light a fire beneath you as well, Dennis, because when you come hard with the ads after Lucky Play was the one I couldn't remember. After Lucky Play and IZIZZI came out, you started upping the prize money as well. So we're seeing that really paying off. I see somebody asking online, who is it? Ronaldo says, will there be a scratchers giveaway tonight to celebrate the big profits? We have to ask Dennis. I don't think that's your department, Dennis.
No, I'm not authorized to do that.
Next time we'll have to line it up in advance. Good idea there, Ronaldo. Next time we'll work it out. So you have the competition, but you also have been dealing with the ravages of the pandemic. I know in times of difficulty, though, in times of uncertainty, it is said that people do a couple of things. So people start drink and alcohol sales tend to go up because, you know, you want some relief. And then people also try to win their luck. So turning to lottery games. Was that the case for you? Or was it that people more felt that it's something that they need to cut back on? Or did they double down on it? Well, based on your profits, it seemed like they doubled down.
Yeah, well, the market definitely expanded. But I mean, I think it was a lot more than that. When we saw that the lockdowns were coming, you know, the team, the lottery team in particular, and also at Cayman Aspire, they took the decision that they were going to go hard with online, you know, offering that channel, and it paid off. You know, we have an online game in terms of sports betting. We offer a lottery products online. We have the online gaming room through Acropolis. So we went hard online, and a lot of investment was made in that, in the IT infrastructure, you know. You'll recall, Kalilah, at the start of the pandemic, I always maintained, you know, while a lot of people were lamenting about the difficulties and all of that, I always maintained that there's always opportunity in crisis, and a lot of money could be made. I mean, you spoke about FESCO in this program, and the increase in the share price, and also Spur3, you know, and there are a lot of shares during the pandemic actually went down, and you know, they just provided opportunities, and I think that's what happened. I think the team, you know, led by Gary Peart and the board at SVL, it did not say, well, listen, you know, we're just going to give up. It said, the team said, you know, hey guys, we have to find a way, because at the end of the day, we have to deliver value to our shareholders, and we have to deliver value to our customers. And I think that was really the driving force behind it. You know, we spent many hours in strategic sessions, you know, and I mean, it wasn't easy. In many respects, it was painful, but you know, we're seeing the reward of it now. And you know, it's not that the profits just come overnight. This has been because of, you know, years of planning and putting things in place. You know, and I think that is really the greatest asset that has moved us forward. You know, and it's not something that can easily be replicated. You know, just replicate, you know, a team of people like that. And that really is it, Kalilah.
You also diversified quite a bit, Dennis. So just the division of Supreme Ventures Services, of which you're now CEO, is an example of that. You've ventured into many different areas. Tell me about the diversification strategy that you've pursued.
Yeah, so we made acquisitions during that time. We acquired Post to Post, which at the time had the leading sports betting brand, gave us a further reach into sports betting and really helped to propel us. We acquired Champion Gaming, which is the gaming machines, and expanded our gaming machine market. During the pandemic also, we made significant investments in Cayman Spark. Even while it was locked down and we were suffering losses, we made significant capital investments there, and you'll hear a lot more about what we've done there in the next few months, and it has paid off. We even in my company, we expanded into what we call the business hub, where we have been providing services based on the same management team that has helped Supreme Ventures Group to get where it is, offering services to small and medium-sized businesses, and the ones that we've been working with are very pleased with it. So we've done a lot. We're in Ghana. We went into South Africa also and started operations there. They're not where we want them to be yet. Of course, the pandemic hit, but we have the confidence because we're putting in the work to ensure that we expand there. So we've done a lot. We acquired Kalilah Financial Services. We've gone into micro lending and fintech products. So we've really thought that the best strategy in times like this is to see the opportunities, see where they arise in the down times, and take advantage of them. I always say, the best time to buy is when everyone is selling, and the best time to sell is when everyone is buying. And that's the sort of approach we took.
Yes, so we've definitely been following your progress with the entering the fintech space. Also, I saw an article recently about the real estate arm, now the real estate investment trust. What's your strategy there?
Well, we haven't really launched anything in that yet. We're looking at it. Of course, announcements will come on that, but it's something that we're looking at. Nothing really has happened there yet. It's really just a name change in preparation for any strategy that we want to pursue. But nothing yet there. So, I mean, you'll hear more about what we're doing, if we decide to do something there. But, one of the philosophies that our chairman has on our board is that, the best thing to do is try, and if you fail, you fail, and you dust off yourself and go again. I mean, that's how business works, and he always tells us that, that is just how it is. You're not going to succeed at everything, but, if you do the homework, the ones that you will succeed at, they'll pay off big time, so we're looking at various things.
So for the real estate, is it simply let me not use the term holding company, but a company for the current real estate assets of SVL, or is the company looking to go into actually property development and acquisitions?
No decisions on that yet.
Nothing yet. All right, you have to bust the news on taking stock, you know. You have a good relationship, Dennis.
Yeah, man. But if there's nothing to first, then,
All right, fair enough. So I didn't hear you mention Guyana and South Africa, those two markets that you have ventured into, and you mentioned as well that the performance hasn't been as great as you wanted, at least not yet. So tell me how those have been doing.
Well, I mean, they have been hit by the pandemic, so we're still structuring them. Certainly, we've taken the time during the downtime to actually put the proper infrastructure in place. We're looking for greater things this year, since everything has opened back up or is opening back up, and we think that we've done the work. We've put in the work, and we're going to make a good run of it this year. As I said, I mean, they're very immaterial right now. But certainly for this year, with the work that we've put in, we expect to build on that infrastructure like we've done with everything else. and we hope to see good results from all of them.
Yeah. So Guyana, I see, and it's in our What's Hot in Business as well, reporting its first $109 million in profits from its first sale of 100 million barrels of oil. And what a time to be in oil with the whole Russia situation as well, right? So that economy really poised for great growth, and signal to the strategy that you guys have been doing there at SVL in targeting Guyana as a growth area. But tell me, with all the diversification that you've pursued, what percentage of the profits is still the lottery games?
Lottery games, as you know, if you see from the segment results, is most of the profits. We're seeing the other ones come on, but it's significantly most of the profits right now, maybe about 85-90% of it, because lotteries is huge. With scratchers coming on, that's a part of the lottery segment. Cashpot, of course, and the other games. Those are our core products, that we've been working with. The other things, based on the projections, we're expecting those to pick up. But lotteries will remain the dominant piece of it for now. We're happy with the progress that's been made in the other segments. And it's a deliberate strategy to look at diversification. We're pleased with where we are now.
To know what percentage, how does the profit margin from scratchers compare to Cashpot?
Scratchers is still young, It's just 1 month. As I said, it has been doing well. The margins are good. That's what I'll say. We expect good things from it, but it's still, just about 2 to 3 months that we're talking about. I don't think that we could, say anything definitively. We just have to see how the market accepts it. Market acceptance has been good so far. Cashpot has been a staple for many decades, so the comparison right now would not be fair. Let's see what happens in the next few months. Maybe by the next quarter, a comment can be made on that.
Do you have any new products coming out?
I couldn't say, Kalilah. That is something that our team is always looking at opportunities. That's what I'll say. But I couldn't say if there are new products coming out or not.
Fair enough. We always like to have the heads up and the breaking money news here on it, Taking Stock, but you're being a little bit stingy with me, Denny. Maybe next time. Make sure you call me first,
Yeah, man. Accountants are stingy,
Tell me about it. I'm coming to learn that more and more every day. Yeah. So before you go, I want you to tell me, we have to look at the stock price, because the stock price went up last week. I know you're a man who watches the stock market. You're an investor yourself. And we saw where Supreme Ventures stock price went up. Where's the number? It went up I think 32% in the past week. You think this is a reaction to the $1 billion profit performance that you just recorded?
Well, the increase was always happening before that. Of course, whenever there's a release of numbers that are better than the year before, you're always going to have a reaction to it. I couldn't say particularly what it was, but there's always going to be a reaction to it. But, we think that the increase in the stock price is justified based on our results and based on the performance that we've had. Certainly over the pandemic, we did fairly well over the pandemic, given the situation. So we're not surprised about the movement. I'm not an analyst in that respect. So in terms of the deep analysis on it, I don't know what the specific reaction was, but we're pretty confident about the stock price movement.
And for those interested in dividend investing, what is the dividend policy of SVL?
The dividend policy is that we pay 90% of profits attributable to shareholders. So you'll see that we made approximately 38 cents, which was coming up from 23 cents last quarter. And we paid out 34 cents, which was 90% of the EPS. So that is a consistent policy we've always maintained. And that is one way of how we pay back our shareholders, and add value to shareholders. As I said, we're all about adding value to our shareholders and also our customers. And, that's just one way of doing it.
Nice. Let me take a couple of comments from the audience. Mikhail says, and they were opposed to the competition, now rolling in profits. And then Spartan King says, does SVL have any other expansion plans like in other countries per se?
As I said, we always look for opportunities. If the opportunities are in Jamaica, we're going to go there. If the opportunities are in other countries, we're going to go there. It's all about return on equity, return on capital. So we do the analysis, look at where the return is, and that's where we're going to go. And opportunities are not things that are static. Something might arise today, or an opportunity that we look at today, tomorrow might be different, based on changing market conditions. So it all depends on where the opportunity is. As I said, it could be in Ukraine, eh? So, wherever the opportunity is, we're going to go there.
Ukraine, boy, that would be a brave move, Dennis. Last comment.
Have a brave team, eh?
True. All right. Last comment comes from Mikhail, who says, thank you for supporting the athletes and being a sponsor of the J3As.
Yeah. As I said, we have we do give back a lot through our foundation. You see, we supported the athletes. We're a big sponsor of the JOA, and also children in state care. That's very dear to our heart. The 20th Weight Wing, we've done a lot of work with them. So, we believe, in giving back. In fact, as you'll see in our report, the amount of money that Supreme Ventures contributes to government coffers in taxes and fees is actually 4 times our profits. So, while we do make money, we actually give back a lot more, to the government and also to charitable organizations.
Joining me, Dennis Chung, especially at the last minute. I really appreciate it.
No problem. All right, Kalilah.
Up next, it's your market recap, and the analysts are standing by.
Of Taking Stock was brought to you by Bulwark Insurance Agency, insurance made easy, and
Download today. Register using your existing NCB online banking login credentials. To open an account or get more info, contact our Wealth Hub today.
Time now for your market recap. The JSE Combined Index advanced by 7,800 points, or nearly 2%. 120 stocks traded across the main and junior markets for the week ending Friday, April 22, 2022. 55 advanced, 48 declined, and 17 stayed the same. Nearly 118 million shares changed hands on the Jamaican dollar market, valued at $929 million. Trans-Jamaican Highway was the most traded stock, taking up nearly 14% of market volume, with people buying and selling 16 million shares in the company. The stock opened this new week at $1.63. Wigton Wind Farm ordinary shares traded at the second highest volume. People bought and sold nearly 9 million shares in the company. The stock lost $3 to open the new week at 63 cents. And Kingston Wharves rounded out the most traded, taking up 6% of market volume, with 7 million shares trading. The stock's price fell 60 cents to open this week at $40.14. Now let's see who had the biggest gains for the week. After positive news about iCreate, the company's stock jumped for the second week in a row, this time by 146%. The stock price opened the new week at $3.05. Supreme Ventures rose 32% after reporting an impressive $1 billion in profits from the latest results. SVL opened the new week at $32.78. This is an $8 increase in stock price that started last week at $24.78. And Mayberry Investments rose 25% to open this new week at $8.96. On the losing side now, 138 Student Living Jamaica Variable Preference was last week's biggest loser, down 21% to open Monday at $12.55. JMMB Group's 6% USD was the second biggest loser, down 12% to close last week at $1 US. And SSL Venture Capital Jamaica was down 11% to close last week at $1.64. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth and Ideal Securities Brokers Limited.
Taking stock now. Testing something because I see some of you complaining about the audio. So let me know if you guys can hear me right now. And if it sounds any better than it did before, let me know in the comments how we're sounding right now. How are we sounding? In the meantime, head over to the poll in the community section of the YouTube channel. Go to the community tab on my YouTube channel and take the poll. If you're on a mobile device, you can just scroll through your feed and eventually it will probably come through your feed. Good. I see George says it sounds better. Spartan says better. Wonderful. All right. So we resolved that issue. So take our poll. Here's tonight's poll question. iCreate stock price has soared after several positive announcements, including taking a majority stake in GetPaid payment gateway. What are your thoughts on iCreate's turnaround? Here are your options in the poll, and you can type it in the chat as well. I'd like to know what you think. Here are your options. Finally, now I can recoup my investment. I'm still skeptical. It won't last. Good for them, but I'm still not interested. Time to take a second look at iCreate. And of course, other, and leave a comment. So take the poll in tonight's poll in the community tab of the YouTube channel. Let's introduce our analyst panel. Tonight, who do we have? Wealth Manager at Ideal Securities Brokers Company, Oric Angus, as well as Assistant Manager of Private Equity at Proven Management, Julian Morrison. Welcome, guys.
Hi, Kalilah. Good evening.
Hey, Kalilah.
Julian, why you way down there so?
Hold on, just a second.
You've been listening to Spice.
No, don't do that. Don't do that to me. Don't do that to me. No.
What's going on?
Can't do that to me.
Oh, too much music, Julian. All right, so let's start out with iCreate since it was our poll topic for the week. What's going on with the stock price? On Friday, it closed at $3.05. So it's been going up and up for the past couple of weeks. Why do you think that is, Oric?
It's obviously in light of the two acquisitions that were announced with GetPaid Limited and a residential development down in St. Anne. It's clear that the company is now on a different growth path where they're trying to diversify their revenue streams. I was, based on my little knowledge, I was told that there are more acquisitions in the pipeline coming up. So it seems as if iCreate is on a different path to
what happened to Oric?
To me or Julia?
Did you go muted? I'm not hearing Oric anymore. Is it just me?
I'm
not sure what happened there with Oric's audio. Let me know if it is just me.
Maybe it's just you.
It is me.
Yeah.
All right, maybe it's my earphones. So let's take out the earphones and see if I can hear you. Were they disconnected?
Yeah.
All right, I am having a slight difficulty. Look like tonight is a night for technical issues. Okay, my earphones are on. All right, let me try taking them out and see if that makes any difference. All right, Oric, can you say something for me?
Check 1, 2.
All right, I'm hearing you now. Hopefully we don't get an echo because I'm not wearing earphones. Otherwise, I have to just draw for Old Faithful, the regular wired earphones. So let me know, guys, if you are hearing an echo when either I or one of the guests speaks. All right. So what were you saying, Arik?
Yeah, I mean, as Tyrone said, the company and the COVID-19 pandemic has changed a lot for them. So they had to reposition certain things and think of innovative ways of diversifying their revenue. So as a result of the two acquisitions that were announced, I mean, that's main reason why the stock price has appreciated so much. The financials are yet to be displayed. I see where that was delayed, so we're waiting on that as well. Obviously, at this point, the percentage stakes in both acquisition nor the financial disclosures, financial amount was disclosed for both acquisitions. So we're waiting to see what that looks like, and then we can have better judgment in terms of the valuation.
Julian, I said Julian is back. What are your thoughts on iCreate stock, Julian?
Well, iCreate is still very young. I think the company's best days could be ahead of it. But right now, all we have to work with are pretty much announcements. So the turnaround is not concrete yet. We haven't seen a material change in the company's financial position. So it's best if investors that are looking for the long term look for the numbers to start to turn. Because when a company is essentially is turning its fortunes, we have to ensure that the numbers are actually reflecting the intention of management because it takes a while for these projects to actually bear fruit. And announcements are simply not enough for investors who are actually looking at fundamentals. But so far, we're hearing good news, which is better than bad news. It's just a matter of putting things into context.
So you made a good point that so far it is only announcements. As a matter of fact, just a few months ago, a lot of people were saying, iCreate is too risky, and you had all the announcements in the opposite direction, people leaving the board. Do you still think that it's too risky a play for a certain type of investor?
Well, it depends. It depends because there are stocks of all shapes and sizes. There are some stocks that are riskier than others. There are big stocks, there are small stocks. So it depends on the investor's risk appetite. So for a company like this, given that it is basically listed as a startup, the pandemic came and the company was materially hit by the pandemic. It has seen a change in personnel as well. So there are lots of moving parts. It's not just that the financial performance was pressured. You have a change in terms of personnel, and it takes a while for persons to sync up and to build synergy, and for those synergies to actually bear fruit and feed back into the numbers. So there are quite a number of things to consider when it comes to iCreate. As I was saying, in my opinion, um, announcements are not enough. So it's going to differ for another investor who is willing to take the risk and say, hey, I might understand iCreate better than you, and I can be more forward looking, and I might be betting on the next 5 years of iCreate. And on that basis, I want to buy at this level because I strongly believe in Tyrone's ability to execute. Because right now we're betting on the CEO's ability to execute. So it's just a matter of perspective. Again, I think the company's best days could be ahead of it, but the fact of the matter is we need to see a turnaround that is concrete, and that is when it shows up in the numbers.
Great point. So we need to see when those reports come out, whether
Right.
all of these things that they have announced actually have an impact. Then again, if you really, if you are a risk taker and you're looking for the opportunity comes before the reports are out and before everybody else starts looking at a stock like iCreate. So consider your risk profile, viewers. Those of you who may be interested in this stock, consider how much risk you want to take. Another stock that was in the news in the past week, and this time for not such a good reason, the past day, I think actually it was yesterday, MailPac sent out a notice to all users that there's been a substantial data breach. I'm both a shareholder and a customer of MailPac, so I got that email. Very scary for a customer to see an email that there has been a data breach and that you need to change your password and your credit card information might be compromised, and even going as far as to advise you to cancel your credit cards that were on the MailPac account. Have we seen any reaction so far from the market to this news? How might this affect them, Oric?
I think the reaction to the news was very mild. It will definitely affect the company, even though it wasn't a substantial amount of users which were affected. I think Kari said it was around 50 users, the most that was affected, and the company has mitigate, put in risk mitigation strategies and help to level off the situation. But it does come with long-term effects and short-term effects. It can be financially draining. It can cause reputational damage, loss of client, and there are legal ramifications to it. So I mean, overall, I think based on feedback that I've received, some of the customers were not pleased with how the situation was being handled by the company, in the sense that it was not being taken seriously. I don't think it will be of any significance in terms of affecting the numbers per se, but it's something that we have to take note of, something that is very critical in terms of when you deal with users. It's very critical that their data are protected. But again, there are people out there who are trying various available tactics to get into corporate confidential information and use it to their advantage to make profits. So we just have to be careful with our information as well, and obviously MailPac will also need to rebuild some level of trust with their customers, because at the end of the day, people want to feel comfortable with providing their information to certain levels. So I mean, it also kind of there are some positives coming out of this, because it shows you the vulnerabilities of the company and ways that they can improve their systems to do better. So I hope that this is a lesson learned and it won't end up like for example a Facebook who have that stream of data breaches year over year per se. So yeah.
Absolutely. And I think more importantly than even the immediate market reaction is how their customers will react, and whether this will have an impact on customer retention. If you might have any saying, well, MailPac isn't treating my data seriously enough, let me move to a competitor.
And it's a very competitive space, so we have
very,
to
very
be
competitive
mindful of that as well. Yep.
All right. Julian, moving on to RJR, Radio Jamaica. Explain what is going on, because there's some news in the past week about them acquiring 1834 Investments Limited, which is if I remember correctly, the non-media assets left over from the Gleaner when the Gleaner and RJR Explain it for us. What's going on?
Okay, so in simple language, the Gleaner has an investment portfolio made up of liquid securities, so some bonds, some cash-like instruments that generate interest over time, some cash resources, and also some properties that earn rental income. So essentially, that investment portfolio trades as 1834 investments. And if we recall, there was a merger between RGR and Gleaner some years ago. So essentially, it could be argued, we don't really know the particulars at this stage, it could be argued as pretty much a continuation of that amalgamation between the two entities, a marriage between the two entities. So as is, the Gleaner, they have merged their operations with RGR, right, through that acquisition, giving birth to the RGR Gleaner Group. And now RGR is essentially taking, as you said, the non-media assets of the Gleaner, which is their investment portfolio. So what will happen is that those securities will start to earn interest income, and where applicable, foreign exchange gains and asset gains, fair value gains for the RGR group, which will diversify their streams of income pretty much and change the profile of the company a bit, because it will affect their balance sheets as well. because their balance sheet will now have those assets brought over onto it. So it will have a change in terms of RGR's performance, both from a P&L, profit and loss, and from a balance sheet perspective. One could argue that it's good for diversification, but that's pretty much it from a bird's eye view.
The only media company listed on the stock exchange. So
Right.
you mentioned diversification, but who knows what the future may hold if that would change.
Yes.
Regards
Yes.
to MailPac, Strong Link says, I was about to get away from MailPac, but decided to remain since only a few persons were affected. All right, so that's Strong Link. And then Mikhail noting Trans Jamaican Highways performance, Trans Jamaica soaring on the new infrastructure information. We see that they finally exceeded their IPO listing price, and they've been doing pretty well over the past couple of weeks. Last I checked, it was at 160 something for Trans Jamaica. Why is TJH suddenly moving, Oric?
I mean, it has to do with the reopening, full reopening of the economy, and when you compare during the pandemic period, they were doing pretty well in terms of revenues. The numbers have moved up moderately. So I think there's speculation in regards to the fact that the economy is now open, so revenue margin should climb even higher, and as a result of that, that's what's causing the movement. I mean, I see where the company was listed during a very rough time at the tip of the pandemic for us, I think around March 2020, within that period. And so investors didn't really get that perks of investing in an IPO during that time. So it's good to see that the company, the stock price has recovered and exceeded the dollar 41 listing price, and deliver some returns to shareholder in terms of capital appreciation. In addition to that, it does pay a healthy dividend, a very attractive dividend yield that they pay out, and obviously that was due to the lack of performance in the stock price. The company is very cash rich, so they can afford to do so as well. So I think it's a very good stock to hold for long term, a good diversification from a general investor standpoint. And if it suits you, then why not?
So when you say that was due to the stock not performing, the
So
dividend yield, is it that you think that is going to change now that the stock price is starting to appreciate?
Yeah, because what certain companies do, they, especially like a TransJam, they want to retain a certain amount of profits, seeing that they have new projects and so forth coming up. So you want to retain earnings at a certain level, so you can reinvest that money in the company. Now, during a time like COVID, when the stock price wasn't what we had expected to be, or it was below IPO levels, the company was really trying to return value to shareholders in the form of a dividend payment, and that would have attracted more people to the stock and view it as an income stock during that period, and hopefully they can hold long enough and wait for it to transition into a growth stock, and you can get a mixture of both worlds in terms of income and growth.
I see. All right. So we should look out for the announcement when their next dividends are due to be paid, and at what rate they're going to be paying those dividends compared to the past couple of years. So we have a couple of international stories that we have to look at, especially Twitter, because that's been all the talk this week. But first, Julian, I want to give you an opportunity to talk a bit about Epley Caribbean Property Fund. It's a company that we don't talk about much, not only here on this program, but in general. It's not one of the sexier stocks listed. They have property in Jamaica, Barbados, I think a couple of other places in the Caribbean as well, but they are reporting results. So tell me what it is showing.
Okay, so I'll be brief. I'm going to share my screen, and we're going to talk about this non-sexy stock, right?
Make it sexy for me.
Kalilah,
I
yo.
believe in you.
Okay, all right. I'll try my best. Okay. So, given that, let's take it from a bird's eye view. So there's Epley, which is the asset management company run by Nicholas Scott from the Mosan Group, and that company is essentially focused on generating interest income from its loan portfolio and its portfolio of leases, etc. Very similar to Asigna's credit investments. And it also manages the assets of this fund, which is the Epley Caribbean Property Fund, by which it earns asset management fees. So it earns the fee income and it earns interest income. And that is at the Epley level. So now we're zooming in on the real estate portfolio itself. So the real estate portfolio essentially focuses heavily on rental income. So we have to look at the growth of rental income over time. And as we can realize, rental income growth has been steady for 2019, 2020, and 2021. We would have noticed some huge leaps in 2020 and in the following year, and that's because of acquisitions. So the average growth rate would be 41.5%, and that's because of the acquisitions. The current growth rate is about 17%. So we see that the company's internal drivers are actually strong because rental income is what matters for a real estate fund like this. Now we want to look at net operating income, NOI, and your net operating income is just your gross operating income, which includes the rent and whatever gains you would make from securities, minus your operating expenses. And that was pretty much robust over the period. They had a dip in 2020 because of a one-off gain, some changes there. But overall, in terms of the trend, it's in a positive direction. And it's very important for us to look at NOI when we're looking at real estate, especially real estate that is generating steady income from its portfolio. Now, building from this, funds from operations is also intact. It had a movement in 2020 that was pretty much tied to what happened to NOI, because the funds from operations is actually NOI minus interest expense, and you're adding back your interest income. So pretty much FFO is closely tied to NOI, and these are the two drivers we must pay close attention to when you're looking at real estate. It's not all about net profit. We have to look at NOI and we have to look at FFO. So essentially, the company's internal metrics are very good. In terms of its net asset value, right, which would be the equivalent of shareholders' equity, it's actually doing very well. In 2019, it saw superficial growth because that's when the company listed on the Jamaica Stock Exchange. The share capital inflated that figure a bit. But on a more normalized level, it's healthy and consistent. So pretty much all the internals are good, both from the income side and in terms of its book value. So the balance sheet and the P&L are both doing what they're supposed to do. And when you're talking about operating efficiency, that's very important for a fund as well, because funds, basically, you have to manage your expenses in order to pay out as much as they can to shareholders in dividends. And we want our operating efficiency to be low, because that means that your expenses are not growing as fast as your income. And again, it's trending in the right direction for this company. The drivers include acquisition of a stake in Empire Shopping Center. They recently acquired a BPO operation in Jamaica, which is 99,000 square feet. They own 50% of Mall Plaza, and they had several other acquisitions which pretty much increased their income flows and offered some diversification. As you mentioned, Kalilah, they started out as a property fund primarily based in Barbados, but they've expanded into Trinidad and Tobago and Jamaica as well. So again, overall, the company's metrics look good. Some investors want to look at PE only. Their PE is 13 times, but pretty much if you look at the book value, the price of book value, which is the price divided by the same thing as we call the NAV, or the shareholders' equity per share. So you divide the shareholders' equity per share to get the NAV per share, or the book value per share. Book value, NAV, shareholders' equity, same thing in this case. We see where it's 0.79. So it means that the stock price is trading at a discount of what the accounting value of the fund's portfolio is. So let's say, for example, the portfolio was worth $1. the stock price is 79% of that. So you're pretty much buying the stock at a 21% discount to what the fund is actually worth, right? So that's pretty much a story that you want to tell. And for real estate investments, you have to look very closely at the price to book, as well as NOI and FFO. So for example, when we're looking at our KP REIT, we want to look at the same metrics. Your NOI, your FFO. It's not all about the PE, because for real estate, your depreciation charges can artificially alter your net profit. So it's kind of different for real estate because you hold so many assets, your depreciation charge can be huge. So it's very important to look at those key metrics and not just net profit. So that's pretty much it. The stock is down 1% down 1% year to date, and it's down 12.84% from the 52-week high. So it could be an entry level for investors who want to go into a real estate asset that has good internal metrics.
I know real estate stocks typically, they're modeled off REITs, real estate investment trusts, which tend to pay high dividends. Is this a good
Right.
dividend stock as well?
It can be. And what's interesting with it is that one, it reports in Barbados dollars. So you have to convert to J. And the exchange rate right now is about $77. And you also have to look at the growth in the NAV, and you also have to look at the dividends. You have to look at everything as an entire picture. You have to look at how diversified they are and how true they've stayed to their investment philosophy. So this is a Caribbean fund. Is it a Caribbean fund investing in the United States? You have to look for things like that, because that's called style drift. You have to make sure that the managers are disciplined, because that is what ties into risk management. So they are Caribbean property fund. All their funds are in the Caribbean. Their portfolio is strong, it's diverse, it's cash flow producing assets that have strong tenants, so that they can generate cash flows even in times of economic uncertainty like now. And in inflation, they have pricing power. They're able to pass on the cost to their tenants, and the tenants can afford to pay it because they're strong tenants. All these things are key areas to look for both a KP REIT and a EPLI Caribbean property fund. So you want to look at them side by side that way.
Thanks for that breakdown, Julian. Much appreciated. Let's move over to the international markets now, where Oric has been monitoring Netflix's performance. Netflix year over year has just been stellar with their numbers. And then now, boom, people have started unsubscribing from Netflix. It seems in mass numbers, their share price has slumped by 35% after Netflix reported a sharp drop in subscribers and also warned that millions more looks like they might be quitting the streaming service. So what's going on with Netflix, Ori?
At the end of the day, Kalilah, competition in the streaming service is very tight. So that's one of the main reasons. So there's increased competition from the traditional entertainment companies. Another reason is inflationary pressures. People are cutting back on their expenses in terms of what they can afford and what they cannot. The key reason for the drop in user growth as well is as a result of password sharing. You have an average 3 to 4 persons per household, and based on Netflix estimate, they're getting paid from 222 million paying households, and of that 222 million, passwords are being shared across an additional 100 million homes. So when you look at it, password sharing is a big thing. The company is trying to cut back on that, and as a result of that, they're losing a lot of users. No,
I think it's more the competition than the password sharing, because password sharing has been a
but
thing
they're cracking down on it
from the start. People have always shared their.
But they're cracking down on it. So you're going to find it that they need to boost up the user margin by cracking down on the password. You have less people on the platform, and then you're going to start having more paying customers at the end of the day. No,
So it could be a good purge then.
for the company, yes, over time. But in the near to short to medium term, you're going to have earnings volatility. So I do think that there are a lot of issues at play here. that Netflix need to sort out. So I do think that, and the company did send out a warning in their last their last quarterly results, where they stated that they do expect the numbers of users to drop significantly. I think they pointed out where they were expecting 2.5 million subscribers in comparison to what the analysts were estimating was supposed to be some 3.3 million. So that's a large gap. So you look at it, a lot of people are moving to competition, not to streaming devices where are platforms where they're not only getting a lot of content but quality content.
Yeah,
Um,
because you have the Hulu, you have HBO
you
Max,
have
you have
Roku,
Disney
all of
Plus
them. So
now,
in
and all the
addition,
major broadcasters now have their own streaming.
right,
You have
but
Peacock TV,
separate.
Paramount. It's a whole bunch of them now.
Right. But separate from that, the company did deliver reasonable earnings. Revenue came in at 10%, which was $7.8 billion. Net income fell marginally by 6%, even though $1.6 billion is quite a heavy hit. But it was in line with certain estimates, if you understand what I'm saying. The company still have a lot of free cash flow, which was about 802 million. That is up from the 692 million per year. So, like I said, earnings quality will reduce in terms of the sustainability of earnings. I think it. I think there's a mean reversion level, and even though we see that significant fall off in user growth, it will build back over time, but it's not going to be overnight. It's going to take some while to rally back to that mean reversion level.
I see one of our viewers saying they lost a lot of customers with the price increase, plus folks dealing with inflation usually get
That's
rid of Netflix first to try to
right.
survive. So
Yeah.
there's that. It is a premium service and it is more expensive, probably like twice as expensive as the other
Yeah.
streaming services as well. Most of them are like $7.99, and then you have Netflix, which is at like $14. Plus you have to pay extra for additional accounts now. So yeah,
But
it's
they're
a, it's a
seeking ways to diversify their revenue streams as well. I mean, I
Yeah,
think
this ads.
I,
I don't know how this
I
ads
don't
thing is gonna be
I don't know that's
acceptable.
going to play out either, because if I'm watching a movie, I don't want anything popping up on my screen, So I don't
Exactly,
know how they plan to manage that.
exactly.
Video game is another option they're looking into. So let's see how that play out as well. That
I've
should do
been
well.
seeing video games on my Netflix feed now. I
Yeah,
was
man.
wondering what
So
that was about.
right. So that's another source of revenue that they're bringing in right now.
Okay.
Yeah, I think they're
Finally,
making a
let's
mistake
talk
though.
about Twitter a little bit. Julian, the board of Twitter has accepted Elon Musk's bid, which means that it seems Twitter is now going private. What does this mean for the shareholders? Is it that they're going to be forced to accept a certain price for their shares?
More than likely, they are going to make what is called um, a tender offer. So essentially, an offer will be made after the pricing and the structuring is done and their internal checks and balances to determine what they think the company is worth. They're going to make an offer to shareholders, and pretty much the market will react to that. However, I'm not sure what to make of it, because even though Musk has made a move to purchase the company, is it that he's going to be a passive investor, or is it that he's going to be an active investor? Is he going to buy the asset and allow specialists to come in, even specialists that he determines will be best to run it, separate and apart from Jack Dorsey, for instance? Or is it that he's going to be hands-on? He
Do
has
you
a
know
history of
Elon
being
Musk to
hands-on.
be passive?
I was about to say that.
Elon does not seem like a passive fellow. Plus, all the talk leading up to the whole takeover and him expressing many, many ideas about what he wants to do with Twitter in terms of policy changes there. Doesn't sound like he's going to be passive.
Yeah, he's very erratic though. He's hard to predict. So it's really difficult to determine what are the next steps for Twitter. What one thing is clear though, he has spoken about his disapproval of the company pretty much censoring its users for whatever reason. We saw the situation with President Trump, or the former President Trump, where he made certain comments and he was censored for that reason. And there are some things that the company wants to address where that is concerned. But the interesting thing about Twitter is that, or what drew people to Twitter, is just how much it made you feel as if you're a part of something alive. You know, there's a pulse of what people are really thinking. They're putting out their real thoughts, and everything is just live, and it's pulling everybody in. So maybe they want to bring that dynamic back, and pretty much use that to springboard into new initiatives to turn the company around. But it's really uncertain because of how unpredictable Elon Musk is.
So let's just take a quick look at how Twitter's stock price has been performing since the announcements, and where Elon Musk, what role he may have played in where Twitter is now. So sharing my screen, Twitter is actually down today, slightly though, down to $49.68 a share. Past 5 days, you see it was actually up, and the news of Musk taking over came out yesterday, just broke yesterday. So we saw yesterday where it did fairly well in the past month. And this is when the whole Muskgate, the Musk drama has been unfolding over the past month, not even a month, it's probably been like 2 weeks. And we see this steep price increase here in early April for Twitter. So how has it been performing over the past 6 months? Well, here we go. It's been down and then back up, I believe, on the news with Musk. And then year to date, we see, okay, it's in the green. Year to date, not bad again. So it remains to be seen what happens next with Twitter. What will shareholders be? Will shareholders be forced to accept something? I see a comment here coming from, where it is, where is the comment? Glenroy saying that they will be forced to accept, they have to accept the $54.20 a share. And that is a premium above what the current share price is and above what it was when Musk started making the takeover bid as well. And then Glenroy says the shares will be observed by the company. I'm not sure what you mean by that. Observed by the company. All right, so that's our discussion for today. Thank you so much, Oric. Thank you, Julian, for joining us. Appreciate your analysis as always. I see, Julian, you're getting some big ups in the chat as well. Somebody said that they miss you as their advisor.
Yes, so I use a name Debbie Cool. Yes, thanks very much, Debbie. Just one final point on Netflix though. I'm not as optimistic as Oric though. I agree that there will be earnings volatility, but we have to think about how consumers use Netflix. They use it like a community almost. So it's something that people share together. It's a social experience. So I watch a show and then all of us talk about it, and that helps to drive the marketing because it's word of mouth and it has that person to person feel. Now that Netflix is going to break that up, it's really going to put a cog in their wheel because they haven't thought about how people actually consume Netflix from a user standpoint. And sometimes, yes, the numbers are important, but you have to understand all the parts of your business. You can't just look at the numbers and say, yo, we need to charge them on them more. No. You might have to charge people more, but how are you going to do that? You can't take away everything that people enjoy about it and then just say, well, we're just going to hike the price. So, especially in an environment with a lot of substitutes, so many competition, so many competitors out there. So I think Netflix is making a mistake.
Well, it's still not finalized yet, you know. So it's
that.
still proposed. So let's see. I remain optimistic in regards to Netflix. I'll hold my point for now.
No, I'm not saying it's the end of the world. No, I'm not saying it's the end of the world. No,
I know.
Yeah. I just think they're making a mistake, but let's see.
Marv says Netflix needs some 10-second ads.
Users in a corner though to decide if
I don't know.
platform
Better
is
not
worth
be in the
using
middle
for
of my
them.
show though. Like
Sorry?
maybe between, I say better not be in the middle of my show. Maybe between shows, like if you're binge watching between one show and the next.
But how would you react to seeing taking stock ad pops up on Netflix? Well, you see.
Yeah.
So I put you in a
mean,
corner there.
yeah.
Yeah. So it depends. I mean, I guess if we have the option to decide if we want ads to pop up or not, then that would be ideal. But I'm sure that many people would not be selecting that option, and I'm definitely one of them. I don't like these ads popping up in front of
Yeah,
me
it's just
from
like
time to time.
a lot of the apps. So you have the free version where you have to watch ads to advance, and then you have the paid version that's ad free. So
Yeah.
we'll see how it works. Thanks again, Auric. Thanks, Julian.
Yeah, man.
All right. Thank
All
you,
right.
Kalilah.
Cheers. Have a good night.
All
We'll
right.
be right back.
To the Analysts was brought to you by Proven Wealth and Ideal Securities Brokers Limited.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilahReynolds.com/store to order your t-shirt and your mask today. Let's get this money. Let me take the last couple of comments from the audience. As Mikhail said early on in the show, cash pot airing is not postponed for nothing in Jamaica, not even the swearing in of the Prime Minister, not even for Miss Jamaica, not even when Miss Jamaica win Miss World, not even for the Queen, nothing at all. Cash pot draw will draw. I tell you that. That's one thing that's guaranteed. And then let's welcome Mini Millionaire to the show. Mini Millionaire says, hello, everyone. First time here. I am 11 and I'm super interested in investing and business, trying to learn from folks like those here about stocks. 11 years old. Welcome to the show, Mini Millionaire. We look forward to seeing you next week and on subsequent weeks. And we hope that you learn something. We hope we can keep it, break it down for you enough that you can understand, because that's our goal here, to try to make everybody understand business and finance. Thanks for watching this week. Everybody hit that like button. If you haven't done so just yet, go and hit the like button here on YouTube or on Facebook, wherever you're watching us. And of course, subscribe to the newsletter at KalilahReynolds.com/newsletter. I'm Kalilah Reynolds. See you again next week. Let's get this money.
Let's get this money.